Hi, Jeff Higley with Hotel News Now. I'm here at the Hunter Hotel Investment Conference at the Marriott Marquis in Atlanta. With me is Shah, the CEO of Noble Investment Group. Mitt, thanks for being with us.
Thanks, Jeff. Always great to see you.
You guys have been pretty active. You've acquired 7 hotels since November. You just signed a deal for 4 hotels in my hometown of Cleveland. What's the environment like out there for you right now? What are you seeing, and what is it about it that's attractive to you?
So we're really excited about our investments in Cleveland. Not only do we buy great hotels there, in outstanding markets in and around Cleveland, but the renaissance that's happening relative to the medical community there, the infrastructure investments that have taken place, we're very bullish about the long-term prospects. Relative to transaction activity, so our normal annual investment pace is about $100 million of equity a year, plus or minus $200 million in overall assets. And this year has been right on that pace. So if you look at the last 12 months, we've made a little over $200 million in investments. Currently, in our most recent fund, which we closed last year, we've invested half of it. It's supposed to be invested over 2 years. We're right on pace. But the opportunity is very difficult. The market that exists today has a lot of investors that are looking for yield, and has a lot of investors that are also looking for opportunities to buy and scale. Right? 2016 will be a very interesting year. We've got a lot of tax regulations that are forthcoming. We've got a lot of entitlement spending. We've got also kind of in the offing, questions about interest rate risk, relative to inflation. But we've also got the flip side of it, which is, is there greater rate opportunity? There's lots of external threats into our business, relative to the cost of revenue and disruptors in our space, relative to the revenue model. And then there's this growing costs of how we take care of our people in our hotels relative to insurance and the like. So I think when you think about it, our business will continue to change and morph, but over 21 years, it's also changed and morphed. If you can create yield, then at moments in time, there's always going to be great amounts of capital, small amounts of capital, but always capital available to our business for those that know what they're doing, and especially for those that are looking for consistency in yields.
When you look at that one-off or hotel by hotel philosophy and the amount of equity that you're putting into a deal, what kind of terms do you see in general out there that are driving the industry now? What are the trends in that regard?
So I assume you're talking about debt trends.
Yes, I'm sorry.
So, it's very interesting. You can sense a little euphoria right now. There's a CMBS market in the hotel business that has emerged. Construction lending is coming back, and I believe financing for assets that have yield is available. But I still believe sponsorship is extremely important. What we're not seeing today and what we've seen in times past, and perhaps it's lessons learned, right? If you've been around our industry long enough, and really for those that provide capital, it's that, as euphoric as things might seem, you've got to prepare for the worst case scenario. And so I believe that capital is back, but really for the best managers, for the best stewards of that capital, and it's not for everyone. And I also believe that there aren't as many opportunities for new development that are out there. That's going to create, while there will be more supply, it won't be the kind of supply growth that we've seen in times past.
Do you want to be a developer? Do you want to be an acquirer, or a mix of both?
We want to find opportunities where we make the most amount of money for our funds. And I would tell you it's a combination of both. It is a certain amount of new development, which we'll do early in our funds to give it the life cycle, a certain amount of redevelopment, and a certain amount of acquisition.
When you talk about the PIPs and the renovations, I mean, that's a big driver in the industry right now. How much of that conversation goes into the acquisition?
A lot of it.
Yeah.
A lot of it. That's where our niche is. We're not going to be the best acquirer, existing assets that have yield to make a macro bet. It's not who we are. It's not what we do. And there are those that do that do extremely well. Our focus remains how do we find opportunities that we can fix to create yield, and then to take that opportunity to market to sell it to those that cover that in-place existing yield. And we call that core-like yields. And so whenever you mention the word core and lodging, people look at you a little funny. But if you can prove consistency in a yield, that's really what a core yield looks like, and that's where we've been successful, over the time horizon of our organization in which to go and monetize our